This is Peter Arender. I'm Chief Investment Officer with Fortress Fund Managers. Well, this weekend, a bit of a subplot in the financial markets. There was a large New York-based hedge fund named Archegos that blew up and had its portfolio liquidated by the banks that had lent to it. So a number of large international stocks were hit the market and their prices got pushed lower. We wouldn't normally follow that kind of thing, except in one small example. In one of our funds, there was a company that we were looking to establish a new position in, but the price had been a little too high recently. And with this fire sale of all these stocks, this happened to hit down to a level that was interesting to us. So, paradoxically, we got a chance to benefit from that a little bit and establish a new position in this stock in one of our funds. Now, we're having this conversation on April 1st, and that means that yesterday, the first quarter of 2021 came to a close. Quite a difference from the end of the first quarter of 2020. I think as the world recovers from COVID, it's worth pointing out that it has not been a one-size-fits-all recovery in the financial markets. In some markets, for example, the US, you could say there's really very little COVID effect left. In some other markets, for example, here in the Caribbean, there's still very much an effect not only in everyday life, but in our financial markets. So first quarter, with some exceptions, Caribbean stock markets still down and global markets up. Our Caribbean Growth Fund, which invests in a combination of stocks in the region as well as around the world, hit a new high this quarter, up about 5% for Q1 2021. A high interest fund, as global interest rates were rising, declined a little bit, down about 0.5%, we think, for the quarter. And our global funds, all positive for the Q1. Our US equity fund up about 14%, international equity fund up about 8%, and our emerging markets fund up about 6%. So I think we are still quite constructive looking ahead for the rest of the year on specifically the kinds of well-valued, high-quality investments in our fund and the kinds of boring companies that actually have just come off a pretty good quarter. And that's it from here.